I think those are all some ideas for people who are interested in that trade.
Now, when you look at the dollar, and I think that's the next shoe to drop too, but I think there's a question of will it be a kind of a slow move, or do you think that the dollar's really going to come under a lot of fire in a hurry? What are you looking for in terms of the dollar, and how will that impact? The next thing I wanted to talk about was the energy. How will that impact energy prices?
Sure. Well, I mean, the dollar has been, with the exception of a brief spurt last year, the dollar has been in a multi-year decline. I mean, it's been going down, as I think about it now, since basically 2001, 2002. And, it's made foreign bonds and foreign currencies, a real profit center for many, many investors. So, markets tend to trend. I think they tend to trend and move slowly over time. And, at this point, I don't see any real indication that trend is reversed. So, I do think that you're likely to continue to see, probably a gradual decline in the value of the dollar, punctuated by a couple of, big sudden drops here and there. And, for me, I think if people are looking for smart ideas for their portfolios, that would be definitely one to consider. Hard for me to kind of pin, to be honest, what correlation that has with energy. I mean, sometimes, James, people always say, for example, gold goes up when the dollar goes down. Well, usually that happens, but not always, right? And we've seen, a number of times in the last year and a half when, gold has rallied and the dollar's rallied. So I can't put too much faith into those intra-market correlations, but I do think that the dollar is likely to continue to decline, and one asset I think I'd want to have in my book right now is something that is denominated in a foreign currency.
Do you have a favorite foreign currency? I know there are a lot of ETFs that are just baskets of particular currencies like the yen. Do you have a favorite currency against the dollar? We own a number in my fund. I think I'll hesitate in kind of naming them specifically. One that has definitely interested in me in the last couple of months, given all the bad publicity, has been Mexico. I think my favorite ideas, James, are the ones where, if you said to somebody, well, what about Mexico? I think most people's reaction would be doubtful, negative. Mexico, it's dirty, it's poor, they've got nothing going on down there, it's corrupt, it's all drugs. I mean, the price action of the peso has actually been very encouraging in the last few months. So that's definitely on my radar screen and in my portfolio. But it's hard for me to pin beyond that, one particular currency where I'd want to be recommending people put money right now. Now, I watch you every week on Fox, or every chance I get when you're on Fox, and I know that a lot of times you'll look at some of the emerging markets. Do you have a play in an emerging market right now?
Yeah, I do, actually. I mean, one kind of going along the lines of seeking out what seem to be high-risk opportunities, or what I think would feel to be high-risk opportunities. I've been very impressed with a lot of the price action I've seen from the Middle East, in particular Israel. I know that there is an ETF, I believe it's EIS, which tracks some of the bigger names in Israel, Teva Pharmaceuticals and other big cap companies in that particular region of the world. I think that would be in my list right now for shopping for emerging markets. I know Latin America has done quite well, and people are very interested in, and probably rightly so, in Brazil and in Russia and in India. To me, those seem a little kind of talked out. I like to be in those areas where, again, I think the popular consensus is much more doubt and disinterest rather than hope and investment. So I think if you said, Hoenig, what's your favorite emerging market right now, it might be Israel. And, some of them, especially the ADRs that trade here in the States, are quite illiquid. I mean, one on which I do have a position is Blue Square Israel, which is BIS, I believe, and this is a supermarket operator in Israel, which is about as thinly traded stock as I like to get involved with. But I think if you approach it with prudence and a proper position size and stop loss methodology and all those technique measures that hopefully cut the risk of investing in anything down, you might do all right.
That was BIS.
B is in boy, I is in island, S is in Sam.
Okay. That sounds good. Now,
insert your requisite SEC disclaimer here. Disclaimer, do all your own homework. Make sure it's, talk with your financial advisor. I want everyone to,
I mean, I think, James, honestly, what screws people up is that they hear me or Kramer or anyone else make a recommendation, and then they go out and they put 25% of their portfolio in it, and it goes down, and they say, oh, Hoenig's an idiot. I mean, my God, do a little bit of your own research. Ideas in your portfolio should be your ideas. You might be inspired by somebody on TV or you read in the paper and internet or something, but if it's your money, it's got to be your idea.
That's exactly right. And, that leads me into a lot of what I think's wrong with the country, Jonathan. We don't have any accountability. We want to watch TV. We want to hear you recommend a stock, and boom, it ought to be free money. And people just don't have the sense of accountability that really made this country great. And it's making me sick because if I allocate my money, hey, that's one of the reasons why I started the show, because I would watch TV and I would see somebody make a pick. And you know what? If you hear Jim Rogers say he's going into commodities or something, you got to have the wherewithal. You've got to match what you've got in your bank account. Somebody that has more money than I do might be able to make a short play and withstand some of the choppiness, knowing that long term they're right. You can't just take a pick that somebody says and not match your portfolio to it. But people, you'd be surprised at the emails I get. People don't want to be accountable anymore.
Well, in a weird way, it's what makes this process of kind of stock market commentating possible is that, a lot of folks, I'm sure not your listeners, but, James, a lot of folks are looking for a scapegoat. And it's like when it goes up, it was their idea. When it goes down, it was all Hoenig's fault. I got to tell you, I would say the majority of my investments are losers. I mean, that sounds kind of crazy for somebody who does it for a living, but, plenty of my investments just don't turn out. I don't think the best investors are the ones that always pick winners. What I think saves me is that the winners are usually a lot more substantial than the losers. And it goes back to all the basics that, I try to talk about all the time. Cutting your losers, letting your winners run, trading with appropriate position sizes. I think that's the secret, if there is one, to making money. Not always picking winners, but trading with a technique that can serve you in good times and bad, and making sure that, when you have losers, and we all do and we all will, they don't wreck your portfolio. You could have bought AIG or Citigroup or Enron or Freddie or Fannie at their all-time highs, and if you had taken a 5% position and traded with a 25% stop loss, you wouldn't have been hurt that bad. But, what screws most people is that they buy it, and they buy more, and they drop to another 15%, they buy more, and pretty soon they find themselves with this huge position in a very weak stock, and essentially they slit their own throat.
And, that's probably the biggest thing I've learned in the past 18 months is don't be emotional about it. Be a money manager. Manage your own money, and when things go bad, get out. But it is, it's so weird, the emotion of traders, because oftentimes, I guess as humans, we really don't want to admit being wrong. But I would hang out. 2 years ago, I'd hang on to a loser going, this thing's going to come back. It's going to come back. And I finally took the position, if there's a better investment out there, one stock that's a little bit better than what I'm in, I ought to sell it and get out. But it's so tough, and I hear a lot from listeners about battling that emotion, especially in volatile times like we're in right now.
It's one reason, it sounds a little counterintuitive, why, whenever annual reports come, I'm more likely than not to just toss them, because you have an investment and it's, say you're down 20%, and that annual report comes and, it's all shiny and glossy, and there's pictures of plants and equipment and, a very honest looking board of directors, and you think, oh, well, they're going to be okay. They've got all these plants and equipment. It's a sales piece. It's a sales tool. So, the three rules of stock investment are price, price, and price. And I think if the price isn't validating your outlook, you're right. Taking some steps to minimize that loss is a smart idea.
Well, Jonathan, we certainly appreciate your time. And again, I want to thank you for the work that you're doing to call attention to what's going on in Washington, and keep up the good work, because our country is so great, and I fear that we're losing some of the things for our kids that we've enjoyed. And it takes people like you being willing to step up to the plate. And I know that I do, and a lot of my listeners really appreciate it.
Well, likewise, James. I mean, you're doing a terrific job too, and you know, we all really need to, I think, take a step back now and, you know, take a look at the direction, as you alluded to, where this country is going, and fight and speak up to save capitalism, individual rights, property rights, all the things that have made this country, you know, prosperous. Yes, for the well-to-do, but for the not so well-to-do as well. So let's keep up the good fight.
Sounds great. Hope to have you back on the show in the very near future.
All right, be well. Thank you very much.